In this video, we're going to be discussing how to treat prop firms like a business, as well as walk through a detailed financial model which calculates what the ROI should be if I invest $14,000 in prop firms over the next year. So first of all, when I say treat prop firms like a business, what do I mean? And really, I think one of the biggest hacks when you want to approach prop firms is not to treat prop firms like you would your normal trading account or your personal trading account, but to simply treat challenge fees like an input cost. You are paying a certain amount of money in challenge fees, and you aim to have a multiple on the money which you invest within the prop firm challenge. But it doesn't necessarily matter how you get to that goal. If you lose a couple accounts, if you make all of the money from one account or 10 accounts, ultimately it's just about making a return on the investment you spend in terms of input cost. Personally, I think this is actually very similar to digital marketing. If you've ever ran ads, the term ROAS will definitely be top of mind. So return on ad spend, where if you put $1 in Facebook ads, you're taking a bet that essentially these Facebook ads will eventually lead to you making money, and then hopefully you can make $2, $5, $10 back for every dollar you spend. We should approach prop firms in exactly the same way. In our trading business, we are going to make an investment of X dollars with the hope that we're going to get a certain amount back, which is a multiple of that. And instead of worrying about having the perfect track record in a prop firm account, or treating it as you would your own hard-earned savings in your own personal brokerage account, simply view it as a cost of doing business and a way to approach it in a very stoic, systematic manner. And really here, we're going to now move over to the prop firm machine. And what is the prop firm machine? What I'm going to go through and also walk you guys through in a very detailed financial model is the machine is a combination of Forex expert advisors, as well as a process to pass prop firm challenges. And the expert advisors are, as you know, automated trading robots, which will do a lot of the actual trading or essentially all the actual trading for you. However, the process in terms of how you actually run the expert advisors is almost just as important as the EAs themselves. For instance, if you just buy a bunch of EAs and you chuck them in an account hoping for the best, you probably won't get the same results as if you approach how you actually deploy the EAs in a very systematic manner. So the whole machine is a combination, which we're going to walk you guys through, of both the EAs and the best way of actually approaching putting EAs in accounts. In my previous video, I discussed about the rolling account methodology, and this video will build upon that as well as show you the actual numbers behind it, just to be able to grasp it in a bit more detail. So we're going to walk into Excel in a couple seconds, but in Excel, we're going to be doing the following model, which I've actually already started with my own money and with different prop firm challenges. This is a real world example, not just something purely theoretical. What we're going to do is we're going to start a $50,000 prop firm account weekly. However, when I say weekly, this isn't like in terms of calendar weeks. It's weeks where our Longbow expert advisor bots are trading. So that means that there has to be some sort of fundamental trigger, be it a COT report or positive options data, to actually be trading that week. So that means that we're going to drop a few weeks, and instead of 52, we're going to start, let's say, around 40, or in this case, 39 prop firm challenges annually. Here we're going to assume that we're spending around $350 per challenge, which leads to an annual cost of around $13,650. And what we're going to do in the Excel analysis now is look at what should our pass rate be, as well as what is our ROI going to be. And we're also going to see how much money can we expect to make taking this approach, as well as walk through some of the rules in detail in regards to how we're going to run this experiment. So guys, let's now jump into Excel. Okay, so now we're at the desk, and before even jumping into Excel, just real quick, here are effectively the rules which we're going to run this simulation and financial model with. Longbow Fund Manager, which is currently our flagship bot, which trades a basket of US equities and gold, will be in the accounts whenever it's running. So our goal is to run one bot per account, and when Longbow Fund Manager is running, it gets first, it's the first pick effectively. However, if Longbow Fund Manager is not running on a given week because the fundamental trigger has turned it off, we would then be using another expert advisor such as the German longbow. In this simulation, we're also going to be running one account every week, and we are also going to ideally choose prop firm accounts that have weekly payout options, because this enables us to get paid as quickly as possible once things are working. And second of all, or thirdly, once we make 2% at a minimum in the account, we will pause it and we'll take a payout. So we want to immediately de-risk our accounts and get paid as soon as possible. So now let's actually go and open the Excel model just to go through this in detail. So we now have this beautiful Excel spreadsheet in front of me, and it's rather colorful, so let me just explain what exactly I did here. Essentially, I ran different back tests, and if you're familiar with the MT5 back test reports, these should be pretty straightforward. And then what I did is I combined them together to essentially match the rules which were previously listed. So what that shows is that effectively here, we only have one bot per account at a given time. When Longbow Fund Manager is trading, it is by itself. However, when it's not trading, German Longbow kind of steps in and does the trading for it. And effectively here, these yellow lines apply to starting a new prop firm challenge every week. So every time there's a new week, we're going to start a new challenge. And that shows that effectively the rest is just backtest statistics showing what the profits are. So this column here would be exceptionally important, as well as we have a couple other columns for the watermark to calculate drawdown with, as well as looking at max drawdown. So this particular simulation is primarily a combination of the Longbow Fund Manager as well as German Longbow. And we're trading them both kind of continuously, so we have more trades. This is a 1-year simulation because it's just a relatively short model here. And this would consist of around 215 trades, taking one a day. And because of that, we never really have to worry, and we're risking 1%. So we never really have to worry about hitting the daily drawdown, just because we're only risking 1% a day. The only real risk is hitting the max drawdown. And here with these just basic statistics, we're going to be aiming for roughly a 90% annual return with a 14% max drawdown. So being a little bit more aggressive here because we're stacking multiple bots together. But as mentioned, we're able to be a bit more aggressive because we don't necessarily need to pass every single account to make money. So what I actually did is over here, you can see that I'm modeling several different accounts. And effectively, I'm modeling a staggered start time, and in both good periods and bad periods, what would happen. So actually quite a good thing is I started some of these in my simulation in a losing time, so we would have lost a few accounts. However, you can rapidly see if we just keep going, we start passing accounts. So this goes to show that from my calculations, we should be achieving, in an optimistic good scenario, roughly a 75% pass rate with Longbow Fund Manager. However, in our Longbow Fund Manager plus German Longbow. However, in our most pessimistic scenario, even assuming a 50% pass rate, which is far worse than expected, the numbers should still work very well. So I won't go into too much detail here because it effectively is just showing how one would go about modeling a rolling account approach, where you have different start times and you just look at the equity curve, which is the starting balance. I'm using $10,000 here and adding whatever the profit would be to it. So it goes to show, and this is just a good way of showing what our win rate or our pass rate could potentially be, as well as looking at how we could make money from these accounts once passed. What's more relevant for this video is to show the ROI calculations. So here you can see the basic calculations which were done to effectively show what ROI and what return we need to make on the past challenges to recuperate our investment. So as I mentioned on the whiteboard, if we start 39 challenges at a cost of $350 each, that will result in around $14,000 in cost. And this would be around 1.1 thousand US dollars a month in terms of cost. And if we assume that we pass 50% of the challenges, and this is a very pessimistic scenario, ideally we're passing 70%, how much money would we have if we pass these challenges? Quite simply, it's around $1 million, so $975,000. And what would our break-even return need to be on that 975? This is before payouts splits, by the way. What would our break-even return need to be in order to recuperate our $13,650? Simply 1.4%. This goes to show, even if we fail half our accounts, we only have to make an average of 1.4% on the accounts passed to actually make our money. So that means that if we were to, for instance, make this 70%, we only have to make 1%. If we make this 80%, let's say it's a particularly good year, we can get by with 0.88%. So really it shows that if you approach this in a very systematic way, you can fail a very significant percentage of your accounts and you still only need to make a fairly modest return on the actual capital gained just because the leverage that prop firms provide is so massive. So once we have this, we can now go over to this return matrix where we show, instead of this 1.4, what happens if we make 2%? What happens if we make 3%? What happens if we make 8%? What is our total return going to be? And this goes to show this is pre-profit split. If we make 2%, we'll make $19.5 thousand. If we make 8%, we'll make $78,000. And keep in mind that we can take multiple payouts, right? So this goes to show, like, this 8% doesn't mean 8% in one payout. This means 8% until we lose the account. So as long as we make 2% on all of the money before we lose the account, we will have made a healthy profit, not a huge profit, of a bit less than $2,000. So that goes to show how much margin of error we have. We can fail half the accounts and make an exceptionally modest amount of money on the past accounts just to break even. And that's the leverage of prop firms. And the reason why most people fail is because they don't do the math and they just start wildly trading and burning through accounts. But if you approach it in a systematic way, you view it as an input cost, you can know that I'm going to lose some. It's not the end of the world because the leverage is so massive. As long as I kind of keep my statistics in check, if I'm passing half and I'm making very modest returns, I will make money. So that was really the example here. And it goes to show that taking this staggered approach, so you know that you're constantly starting new prop firm challenges, you're constantly passing some, so not all of your eggs are in one basket. You can slowly build up this capital base and then use the winning periods, as mentioned in the previous video, to make returns. So this is really what I am currently doing, these rules, using our longbow bots, and I will keep making these videos to update you guys on the progress. But just to date, like my Blueberry payouts with a couple accounts are essentially covering the majority of these costs, right? So it shows that once you have a few accounts, that you can just bankroll this entire process. Second of all, in terms of risk, it's not like you're spending $13,000 in one shot, right? You're spending $1,000 and then ideally the majority of that money is coming back in multiples of that before you outlay more capital. So I wouldn't advise you to go out and drop 14K on prop firm challenges tomorrow. I'm saying that if you essentially stagger it in such a way where you're also going to get payouts before you outlay more capital, that can enable you to really leverage this opportunity. So guys, if you're going to take away anything from this video, always make sure you do financial modeling before you spend money, or ask me and I'm happy to give some advice. Because realistically, if you do the math, you can see that you don't necessarily need to have a perfect approach to even trading to do exceptionally well with prop firm challenges. You just need to be systematic, you need to be smart about it, and you need to be consistent. If you do those things, there's no reason why you can't get paid. So guys, hope you enjoyed the video. Leave me a comment if you have any questions. I'll see you in the next one.